Hey everyone, Charting Man Dan of the Chart Guys. In this video, I'm going to be going over my AI stock watch list, how I go through that watch list to select the names that I'm interested in, some long-term setups, some short-term setups, and the lessons that we've learned about the sector over the last week. So here is my AI stock watch list that I continue to narrow down, and I figured out how to finally share it. So I will share the link in the comments of this video if you want to jump on board this watch list as well. And again, I've been removing names that either are penny stocks, I traded penny stocks for years, I've moved on from them, or names that have gaps on the 5-minute time frame and show a lack of liquidity, names that trade less than $5 million average daily volume. These get cut from my list. And so what I do when I'm going through my list is, a lot of people use scanners, nothing wrong with that. They're definitely a very useful tool for traders. I love looking at all the charts. I want them all to be in my memory, and obviously I'm not memorizing them all, but I go down the list and I look at every single name. And I look at what does the daily chart look like. And one thing that I'm looking for is a setup that is in my wheelhouse as far as a pattern that I am comfortable with and looking at in terms of clarity. And for me, this comes with experience. After 12 years, I know what kind of setup that I'm looking for. And that's a very difficult aspect for new traders because they don't know who they are as traders yet. They have to figure that out through experience and trial and error. And so they go down a list and say, well, what setups are the ones that I should be looking at? So for me, I want to see the names that have broken out from recent price action. So you look at the name like AI, which I've been trading a whole bunch recently, and we can see that on this move up, we got to the highest levels that we've seen in 8+ months. A lot of the names in this sector have very long-term downtrends and a ton of overhead resistance in previous price history. And to put it very simply, a lot of bag holders. And so if you look at an example, LMND. So anybody that's bought LMND in the last 2 years of trading, I'd say 95% of them are in the red. And you can see that just by looking at the chart and where we stand. So that is overhead resistance. That's going to be a lot harder for the bulls to work through. We know the most opportunity in hype and euphoria markets is blue sky breakouts. And the majority of these names are not close to blue sky breakout. And in my prior experience, that's where I have made the most money. So I'm not treating this like prior hype cycles. We're also noticing the importance of the broader market. We're pretty much seeing the sector doing what the broader market is doing, just magnified. AI correlates with QQQ. It just does so in a much more significant way. If QQQ is green, AI is going to be green a lot. And if QQQ is red, AI is down a lot. So keeping an eye always on QQQ as I am trading. But I don't want the names that have a ton of overhead resistance. And I like tightening ranges. So I'm looking for names on setups that I want for this week for day trading. And I'm looking at long-term swing setups as well and trying to see the names that catch my eye. So I go down the entire list and I want to see all the different setups and pick out the ones that stand out to me. So I did that for this week's video and I've got 7 names that I am going to be focusing on. And so they are AYX, DDOG, SPLK, AI, SOUN, and BBAI. And just right off the bat, BZFD is what kicked this move off for a lot of us as far as, okay, the hype's here, the euphoria's here, the volume's here, the gains are here, and it's a pump and dump at this point. We're likely going to hold 89 cents, and we're likely going to bounce and form a lower high eventually. But the fact that we've retraced this much of the move, and there's been such an inability of a bounce since we topped out at 425, I was looking for a daily high or low here. And, I had a good entry. I sold half and then I got stopped out break even. And that was the only attempt that I made here because as soon as you lose daily EMA 12, it's then a red flag for me. So I'm viewing BZFD as a pump and dump, but it's a great reminder for me that number one, I'm not falling in love with this sector. I'm not looking to invest. I need to know exactly what my goals are. And my goals are to trade the volatility in both directions. I don't care if it's up or down. I've been shorting AI a lot this past week, and I will continue to do so as long as the broader market is showing us a bit of relative weakness. So that's my approach to this sector. Other people are going to have different approaches. Other people are going to be looking for longer term trades or investments. And there's nothing wrong with that, but you just have to clearly define this before you approach the sector. Otherwise, you're just diving in head first without a game plan. So I know that I'm looking for trading opportunity in the short term. And I know that when these names top out, we can very easily get back 20 to 40% because there's extreme volatilities in both directions. And that's the case with BZFD. So it's back now to a penny stock, and I can see that we traded on Friday essentially less than $10 million. So to go from trading $800 million in a day to trading $10 million, that shows me that the interest has significantly been removed from this stock. So I don't care about BZFD anymore. I'll keep it on my watch list just because, who knows what will happen in the future, but it's not on my list for this week. So now we have to be aware of earnings. Earnings are coming up for a lot of these names. And for me personally, with my trading style, I'm not holding any positions through earnings because that would just be gambling. I do not have any fundamental edge on any of these companies. I have not put in dozens of hours of fundamental research to give myself an edge. So if I think I have an edge, I'm kidding myself. So if you have put in a ton of research, then maybe you have that edge into earnings. But the majority of people don't. And they trade earnings because of what they think is going to happen. And that is straight up gambling. So that's not what I'm here to do. I'm here to gamble with an edge, and I have no edge with earnings. So I look at a setup like DDOG, and I really like this setup because this is an equilibrium, and this is one of the patterns that I'm extremely comfortable trading within it and trading the break when it happens. And so I'm looking for a higher low compared to 75.54, but making note that the earnings are this Thursday, I know that by the time this pattern develops enough to where it's going to break, one way or the other, that earnings are going to be right there, and we're not going to get any follow through that is not going to be dictated by the fundamental earnings reaction. So I look at this and say, oh, I like that setup. Wish I could keep an eye on it. Earnings this coming week, it's not going to be worth it to me. I'm going to keep it on my list, but it's not on a setup that I'm watching for this week. So now let's talk longer term setups before we zoom in to what I'm watching this week. So longer term setups, looking at SPLK, I'm on the monthly time frame. And I look at a name like this and say, okay, we've dropped 70% and we've been in a monthly downtrend. Big bounce. Can we set up the uptrend? No, we fail. And we drop to the lower low on increasing bear volume. Big bounce, lower low. Weak bounce, lower low. So a clear monthly downtrend. And I can say that we have been in a monthly downtrend in this stock for over 2 years. So when that changes, it's going to be a notable shift in the character of this chart. Just like Bitcoin was in a weekly downtrend for 7 or 8 months, and then it confirmed a weekly uptrend on a break of 18.4 thousand, and it ran up from 18.4 thousand up to 23,000 or wherever it ended up. And so that was a notable shift in the character of the longer term chart. So I'm watching for the first monthly uptrend on SPLK to show us that shift. And the fact that we've seen a 70% drop is, in line with a lot of growth names in the market with what we've seen over the last couple of years. And of course, the bear market that we've been in 2022. But I like the setup here where if we reject from this resistance level of 116.84 or break it with no follow through, we're watching for an inverse head and shoulders pattern. And this is the same 2-week inverse head and shoulders pattern that the S&P 500 just confirmed. And we were watching it very similarly. We had a big enough bounce to look for the higher low, and then we got that bull break. Whether it follows through or not remains to be seen, but it was worthwhile scouting that longer term pattern. So I'm doing the same thing here, and I know that it might take, until June to shape up. So these are the kinds of patterns that, I'm not going to check in on SPLK every day that I sit at my trading desk. I'm going to look in on it maybe once a week, and I'm going to watch to see how this longer term pattern develops, and I'm going to see if this trade comes to me. And this trade would come to me by shaping up a monthly higher low. Maybe I make an entry with my stop under the higher low at that point, saying we're either going to confirm this monthly uptrend or I'm going to stop out and be wrong. So I'm keeping an eye out for a monthly higher low on SPLK to try and shape up the first monthly uptrend in multiple years. And we have seen a big enough bounce where that is possible to be shaping up at this point. But again, we've seen that in the past that did not follow through. 60% drop to lower lows or 60% bounce to lower lows, 43% bounce to lower lows. This one's a bit bigger, 69% bounce. So bulls have a bit more space to work with, and we'll see if they can pull it off. So again, this is one that I just write down on a piece of paper in front of me and keep an eye on it for further down the line. AYX, same deal. Key weekly resistance is being tested right now. We can see 69.29, 69.46 is a double top, and we just rejected from that this past week. We had a bullish earnings reaction and a gap up open and a ton of profit taking right under that resistance level. So there's a number of things I'm watching for here. And again, I'm looking in both directions. I'm looking for a daily higher low, anything above 55.23, and that's going to be the most likely scenario because of the amount of space that the bulls have to work with. Maybe it comes in first hourly oversold conditions. If the bears confirm an hourly downtrend, that can be a bear trade that I can be looking for. If we bounce on Monday, anything under 68.95 is an hourly lower high. So if we set that hourly lower high, I can short it and put my stop over that level. If we confirm the hourly downtrend, daily consolidation is underway, and that would essentially be my bear entry attempt for a triple top rejection at that level. I can also be watching for the daily high or low. So, am I bullish or bearish? I'd be bearish on an hourly lower high bounce. I'd be bullish looking for a daily high or low. So the answer to that question is determined by, well, what time frame are you talking about? And that's an important aspect of trading. When you have a chart that's in a trend, the same trend on every time frame, the monthly, the weekly, the daily, the hourly, they're all in an uptrend, then yes, you can be straight up all bullish that name. But in the current market environment, we've got monthly downtrends, weekly uptrends, daily uptrends being lost, hourly downtrends. So you should have a differing perspective or bias on the trends of an individual name based on different time frames. Like I just gave as an example, I can be bullish a monthly chart and bearish a daily chart, and they fit within each other, and it's a relationship between these different time frames. And just to plug, Chart Guys Joey is going to be doing a webinar about the interrelationship between all these time frames and how to use them towards the end of this month. So keep an eye out for that end of February. But AYX, I'm scouting a daily high or low or an hourly lower high. We'll see what Monday morning shapes up. And bigger picture, if we do reject from this resistance, again, another longer term inverse head and shoulders potentially shaping up, I would look for the high or low. And then we would watch to see, can the bulls confirm the first 2-week uptrend? And I chose the 2-week time frame just because that's where I'm seeing clarity. It smoothed things out a little bit. And again, a prolonged downtrend for years. And watching to see, can it shift? Because we know eventually it will. And if you look at the 4-month time frame, real long term, we're looking for this rounding action to try and get a bounce going for the longer term time frame. And again, earnings are going to be a factor here. Oh, actually, I take that back. We just had earnings. So, never mind. Long-term pattern to be keeping an eye on. So now the names that I'm looking at in the short term this coming week for day trading opportunity. And again, AI, I'm watching in both directions. It's been very good to me in both directions over the last couple of weeks. We are technically in a downtrend with the lower high and lower low. At the moment, the lower low doesn't have follow through, and at the moment, we're holding daily EMA 12. What the bulls do like to see is huge bull volume on the way up and declining volume on consolidation. There's no huge red volume days. There's no race to the exit. That's a good sign. So we know that we're going to form a higher low eventually on one of these longer term time frames. The question is, are we going to break 2156, the low of this past week, and start that weekly consolidation this week or not? That's the first question I'm going to have this week. The second question, can the bulls confirm an hourly uptrend breaking 2359 to shift the short-term momentum? Because the direction to be playing AI over the last 4 days, there's been a lot more bear opportunity than bull opportunity. And so I'm watching to see if that's going to remain the case. But if the bulls break 2359, for me, that's a signal. Take a step back as a bear. Be a little bit less aggressive as a bear. Be more open to the bull side of things. And again, every day trade decision that I make on AI, QQQ is a factor. Sometimes I can recognize relative strength or relative weakness on AI with what QQQ is doing. And I have confidence that QQQ is going to form a 15-minute lower high and AI is showing relative weakness, then I'm scouting a bearish entry. So it certainly changes from day to day, but this is the kind of thing that, on my live streams and posting setups throughout the day, it's one of my major names that I'm going to be continuing to keep an eye on as long as it serves me. Again, I've got no emotional attachment here. I've got no directional attachment. And as soon as we lose this volatility, I'm gone, because that will happen. That's how we see it happen. We see a significant amount of volatility in both directions. Eventually, we just tighten up. The volume drops off significantly. The opportunity drops off significantly. And if I keep trying to trade it in the same way that I did during the volatility, I'm going to get back my profit. So the trade's going to come to me. I'm going to trade it as long as it suits me, and then I'm going to ditch it. So I will be scouting bullish entries if we break 2359. Not just, break 2359, I'm entering bull, but if we break 2359, maybe I scout a 5-minute higher low entry the next time we consolidate. Anything under 2840 will just be a daily lower high. So I'm going to be keeping that in the back of my head, even if we do get this bounce. And that's my approach into this week for AI. You could be watching the 2-day time frame as well to smooth it out, because again, we are expecting a higher low and then a lower high and a tightening range on one of these time frames. And right now, the 2-day time frame is nice and smooth and clear. So I will be keeping an eye on that. The hourly RSI did get to oversold conditions, so there's no hourly back burner. If we were to get extreme and keep dropping all week, maybe 4-hour oversold conditions would have me scouting a bounce, but I would rather be looking in the direction of an already established hourly trend versus trying to nail a reversal in the trend. Because when these names are so volatile, trying to nail a top and a bottom is extremely difficult. So I'm fine missing the bottom of this pullback, but ensuring that when I am back to looking bullish, that the momentum is in my favor. SOUN, also still pretty strong. Same lower volume on consolidation, tons of space for a daily higher low, and support is 356, 351, 333. We're just looking at the low of every day there on the way up. And if the bulls can confirm the hourly trend change back in their favor over 419, our daily higher low will very quickly be set. And if we look at our retracement size with Fibonacci's here, we can say that this is still a potential daily bull flag if 356 continues to hold from here. So volume, again, considerably dropping off. It's still a lot of volume. That is, $70 million traded on Friday. So that's plenty for me. And I haven't traded SOUN yet. And again, my focus is all AI because it's giving me everything that I need. And I keep an eye on some other sectors and some other names, but AI, until it stops serving me, it's going to be my main play. But SOUN will be scouting a daily higher low this coming week. We have not hit hourly oversold conditions yet, so we can keep an eye out for that as well. But it is one of the stronger names, and it is a small cap name, obviously keeping that in mind. And BBAI is similar. Small cap name, volume definitely dwindling. We got to keep an eye on that because now the volume is more like $30 million traded on Friday. And when I'm figuring out that number, I'm just using rough math. I look at the volume. Okay, 6.5 million shares traded around $5. 6 million times $5 traded, $30 million. Again, very rough number, but it at least gives me a general idea. So daily inside bar on Friday. If we break 517, it's an inside bar bull break, and our daily higher low will then be established at 453. Once SOUN and BBAI establish a new daily higher low, that's then going to become our most important support level to see if the bulls are able to keep the control on the daily time frame and maintain those uptrends. So again, no red flags on this BBAI consolidation, daily EMA 12 support coming into play, and keeping an eye out for a daily higher low to be established sometime in the first couple of trading days this coming week, unless the broader market sees a significant amount of weakness. And again, that's a factor. If SPY and QQQ are down 1%, I'm not going to be looking long in this sector. I'm going to be looking for shorts on lower highs. So that is what I'm keeping an eye on for the AI sector heading into next week, which will be February 13th. Thanks for tuning in and the likes and the shares, and we'll continue to keep a close eye on this sector as it continues to develop and give us trading opportunity.